It's been a minute. It's good to have you back.
Hey, Scott, how are you?
I'm good, thanks. So our prior guest described himself as a reluctant bear. Are you a content bear? What are you now? As we mark some pretty interesting levels in the stock market here as we finish this quarter.
Yeah, well, what a great way to end the quarter. I consider myself an eternal optimist, but I tend to lean into what Sebastian and Stephanie were saying, which is the validation of 4,100 at this point just still, to me, seems like we're a little bit ahead of our skis. And it seems like, Scott, you and I for the past year and a half have been having a similar conversation where I just can't justify markets being valued at this level. I don't know that we need to retest the lows. I don't think I'm a bear or a buzzkill by any means, but I think a range-bound market is the best that we can expect for the foreseeable future.
Why have we rallied then? Is it about a Fed pause? Is it about the environment growing better, investor sentiment improving? If you can hate on an up market all you want, if it keeps going up, so be it.
Yeah, well, I love being wrong. When the market's up, we're an equity manager. Our mandate is to be fully invested. So it's always good when I'm wrong. But I think that the idea that the Fed pause was forced into existence because of the Silicon Valley Bank has given a shift in sentiment like I've never seen before. And I think that the enthusiasm is maybe a little bit overdone because it's a real banking problem that's causing the Fed to pause if indeed they do. And if they don't pause, they're pretty darn close to the rate hike peak. But the problem is we're not seeing enough of an abatement in inflation. And that's what makes next week's CPI report so important, because with PCE this morning, it's still the same as it was in February, the same as it was in January. I mean, leveling out is certainly better than going up, but it's not going down that much.
I know, but if you're negative on the market, why are you buying Apple up 27% over the past 3 months?
Well, we had sold it just about 6 weeks ago at 156, and I took some losses in some healthcare names that didn't quite work out the way we wanted. Apple at the time, about a week ago, was at 150, so we're up a little bit over 8% on the trade since the rotation back into it. And my love for Apple is sincere, but we don't always love the price that it trades out or the multiple that it trades at. So if you're in Apple right now and you've enjoyed a really nice run, we'll be writing covered calls on it next week.
Yeah, I'll note as well, we are getting close to a 400-point gain here on the Dow, Kevin, and tech has clearly been the story of the moment, right? There it is, just your live picture, the big board here, 383. There's your NASDAQ, 1 2/3%, just building on that 16+% gain that we've seen in the quarter. Do you think this tech move has more legs to it, or is it run a little too far too fast?
Well, we have to look at the base that it's coming off of. So if we say that the NASDAQ was down 30% on average in 2022, it has a long way to go to get back to a break even. So maybe it was oversold at the end of the year. Maybe there were repositioning. There were losses being taken. And to see it rebound it makes sense. And I think it could certainly continue. But I'm not backing up the truck on anything from a valuation standpoint. We're looking at a market that should be much more of a range-bound, speed bump type market. And that bodes well because we're going to be in a market that at some point will turn into the next bull market. I just don't think that can happen in a sustainable way until we really see inflation coming down. And you want the Fed to pivot. You want the Fed to lower rates. And the idea that can happen this summer, to me, just seems very, very far-fetched. I'm looking at that as 2024.